Hey, it's Mack with PriceActionTradingSystem.com, and it's Friday. It's January 9th. This will be a chart lesson for today, and it's been just a excellent trading week, especially for the first week of the year. We've had some really good moves. They've been up and they've been down, but no matter which way they were going, there were some really great moves. And so this first week of trading has been pretty doggone good. Um, but anyway, let's talk about what I saw today. Early on, this looked a lot like a trading range. You see my upper line and my lower line, and it turned out we went lower, um, and then we corrected. It turned out this, I wasn't sure about the green channel here, but it turned out I believe it was valid. We got a break here, two legs. We got one leg down, a correction, then the second leg down, and then we reversed and we climbed a little bit and just kind of got back in a trading range. We've broken out of there. It's only about 2:15 my time, Central Standard Time, so we've got another hour to go in the trading day, and it looks like we may end up coming back up here to where we um, closed yesterday or opened earlier. This was yesterday's open, the yellow dotted line. So we may end up unchanged before the day's over the way this thing's going. At this point, now that we've broken higher here, I would look for a measured leg like this right here that we traded up first. I would start looking for my first target right about there, 20, just short of 2050. But I'd probably move it over here too, because that's really where the new rally started. So that puts us closer to 2052, somewhere between 2051 and 2052. So that would be my secondary target um, at this point. And you might be able to find a channel here as well. Let's just draw it off these first couple of swings here. This is something else I'd be looking for. I'd start with it there, and if you went on through there, I'd be looking at right about there. It kind of fits well right across there. So I'll leave it there for now. We'll see what happens. And there's probably, see if we can find any evidence of a midline in there. Yeah. I mean, that looks pretty much like it right there. It fits really well. We'll just leave it there and we'll see what happens. See if that continues to hold or look valid till the lesson's over. That's how I do this. You just start putting your lines. You use the first couple of swings off the highs or the lows, and this is kind of an art, or I wouldn't really even call it an art. It's more of a skill. But once you get skilled at it, you can usually get pretty close. You don't always have to be perfect. I tell people that, but you have to be close. You can't, like this channel working down through here, you can't be too far off. If you are, it's not going to work. And but you don't have to be perfect. You might have a channel working down here that may not look exactly like mine, but it may be close enough that you come to the same conclusion, and that's all that matters. So I hope that makes sense. But anyway, um, we've been range bound. We've broken out. We traded up and notice this big move up here into this range, and then now we're heading out the other side. That's usually what happens. If you trade up into a range, um, your bias should be to expect it to hopefully break out the upside. Doesn't mean it always will, but that's generally what will happen. That's the bias. And if you trade down into a range, generally you're going to break out to the downside. And I don't know if you would say we traded down into this range. This was a pretty big down move before we went into this range. And I don't really know that you can classify that as a range. It looks rangy, but we've really been trending down since this point. We really had a little trend up with a double test rule, and then we've been trending down since basically the open this morning. So I don't know if you even, it did find some hesitation where I was looking for a possible um, the bottom of the range, but it went on through there. As you can see, we bounced, and that's pretty typical. But it didn't hold. It didn't continue higher. It just turned back down, and we've been trending down. Well, I shouldn't say we've been trending down ever since then, but we trended down until um, about 2 hours into the trading day, and then we trended. We recovered a little bit of that and went into this trading range. It's kind of been, and this is definitely a range here. You can see that we broke higher here and we got a measured move that kind of broke lower. And so that's definitely a range, no doubt about it. There was something else. Oh yeah, I wanted to talk about the news item. This was your um, unemployment, non-farm payrolls that the market perceived to be obviously pretty good when it first came out because the market just shot straight up. But notice what happens, and this is really common when you get a news item that moves the market real emotionally like that. It's very rare that you'll move up and then go into a trend up, or move down and go into a trend down. What will usually happen after a big move is it'll get real emotional for just a short period of time. Then when it'll finally settle down, and it usually will take all that movement back within the next hour or two. And you can see that's what happened here. This started at 7:30. That's when the news came out. Maybe it's a little bit before 7:30. It's right at 7:30 is when the news came out. So there it is, and it shot up, and then by this is where it started at, really, right in here. You could just call it right here. So by before 9 o'clock, it'd taken it all back, and then the market just kind of resets, and you see it kind of chopped around a little bit, and then just continued to go on with a down move. So just make sure you kind of know that about the news. Don't try to chase these, because what happens is most of your amateurs watch the first move or first couple of swings, and then they see it going higher again, and they try to chase it. And no sooner than they get in, it reverses and look at it. So just understand that wait for the volatility to slow down, and then look for a way to get on. And really all you can do is draw your short terms. And all these short term trend lines worked out real well. You got your move down, your break, and move to a new low. You got your move up here, a break, move to a new high. You got your move down here, a break, move to a new low. And then a move up, a break, a move to a new high. So all of these are working out. You've got your move down, a break, move to a new low, your move up, a break, move, or attempt to make a new high. It just made a double top there. And I didn't draw this one. But you'll see the same thing over and over. I drew that off the first two swings, just copy it and move it over, and you can see it fits real well there. But you get your break here, and you tried to make a new low twice and made a double bottom, then it bounces. You got your move up here, a little break, a close outside right there, a couple legs up to a new high, you're moving down, you break, a move to a new low, you're moving up, you break, and it tried twice to make a new high, and that's generally a good chance to go short. You got your moving down here, and it breaks, a couple legs down to a new low, and then you've been moving up. And you got a little trend line working up right through there. You can see that. But that's, I mean, these are most of these short-term channels work. You know, they follow the price action rules really, really well. So um, just be aware of that. Don't ignore them. And so it really does help you to stay on the right side of the market by using these. Because when you get a move like that, you don't know when it's going to end other than when you finally get a break and you're expecting a new high. And it tries it twice. And generally, that's your double test rule, and then it sells off. So prices have been really following our price action rules really closely lately. And that's good because it makes it easier and more predictable. So let's back out, talk about the trades. This, again, was a news item. So there really wasn't a good setup. I don't like trading that stuff. It's too risky. If you saw this forming right here, it broke lower and then went up. And you know, after a move up like that, you're going to test that high again after the break. There's very strong odds of that. So you might have thought about going long there. I'll mark that one in green. But, you know, I didn't like it, to be honest with you. So then you make your new high. It was really tempting to go short there because now you got to break the new high. But a lot of times it'll push up one more time, and you see it did, although it sold off first. But you're better off to wait on a second entry short counting off this high. And so you got a new high, it moves down, and it tries to move up there again right into that resistance area, and it turns and goes right out the other side. Just put your stop right there. And quick, easy move down. It didn't get anything more than that because it bounced again. And When it broke lower right here and went higher, that's a second entry long. But notice this little channel, and that's the first break. And so there's a good chance you could get a little trap because you hadn't tested the low again yet. Um, so I just thought that was too risky. And that's not the best setup bar. It's not a terrible setup bar because it could have easily ticked one tick higher and closed green and bullish. But if it would have went out this side and then went out the other side altogether, I would have liked it better. But the fact that it couldn't even get back up to the previous high, that makes it questionable. So no entry there. And plus you got your little channel working up. And then you finally get a break of it, a move to a new high. And now you've got your double top up here. And this is a little lower high than this high right here. This high is a little lower than this high. And so that's your, pretty much it's the same thing as a double test rule of this high. So I like it. And notice there's two legs up. And you got your nice little bearish bar there. Just go short. Now your stop has to go above this bar because that's really your signal bar, but it's not a good setup bar. So you get this bar that kind of inside bar with a bearish slant. So I liked it. And you don't know that it's going to take off like that. You're just hoping you get a scalp out of it. But this thing just rockets on down and just keeps going. So that one move right there can make you multiple points. And then, of course, it bounces. But that's the first break of that. So you know you're probably going to get another shot to go to test that low. And that's I like these kind of moves because they give you a lot of room in there. And you get your close outside here. It's not a real strong close or anything, but it definitely, these are doji's, and you get your close outside and move to a new high. And then look at that bearish bar. And notice this new low, pullback, first entry, pullback. That's a second entry. It was tempting to go short below that one. But I waited, be honest with you, I waited until you got this one and just went short below it. And then you're looking for a measured move. So try to stay with that move to right here. And look what happens. It moves down and you got this channel working down. You finally get the break and a move to a new low. And that move to a new low comes within 2 ticks of that target, and it bounces right off a trend line that's equal to those first 2 swings right there. And so it's just, I mean, it's amazing how this stuff does this over and over and over. And you just have to learn how to understand what to look for. But it's real simple to measure that and draw your line over here and put it right here. And once you start going down, then try to stay with it till you get here. You might get out right here. And there's really a second entry short here. I did not mark it. You know you're going to get a retest of this low most likely, but there's been some strong support right across there, so there's a good chance that it bounces and doesn't quite make it. Okay, I'm sorry, I had an interruption, and I don't remember where we stopped. I think we stopped. I think we were talking about these measured moves down and how to find these measured moves. I honestly can't even remember where we stopped. I apologize. But I think we talked about, I know we talked about this first trade. I think we talked about this second one. I think we were talking about this trade, yeah. You're looking for a measured move. That's correct. We talked about this trade. Second entry short here. We're looking for that measured move. And just try to stay with it, at least until you get to, you probably would exit right here. When that bar formed right at that previous support area, that's a good place to exit. And no, you don't get every last tick, but if you exit right in there, you get all but 1, 2, 3, maybe 4 or 5 ticks of it. And that's as good as, you don't have to get every. What I found is if you try to get greedy and you try to get every last tick out of every last move, you will a lot of times give back far more than you're giving up by just exiting at an expected support or resistant point or reversal type area. The areas where prices bounce are reverse. Sometimes you'll exit there only to watch it go 10 more points, but it doesn't happen often enough to make it worth the risk. So just plan on exiting. But there was a second entry short right here, And the reason I just don't like it because I was afraid it would bounce right here. And it tried to bounce all, and it ticked higher and then turned down. But you don't want to go short there for sure because the odds are it goes a few ticks and reverses, just like what it did. And it did bounce right off the green line here. You may not have had this green. I actually got the green line off of that low and then pulled it up. I believe. No, actually, I think we had it off this high and then I pulled it down. So it did probably bounce right off that green line. I can't remember, to be honest. But generally, you'll draw it off those first two swings. So I'm sure I probably drew it here and drug it down. And I think I was a little concerned when it didn't bounce, when it bounced early here. So I was wondering if this might have been a little flatter, but it turns back down, and where does it bounce right off of it? So yeah, I do remember that now. But there's a second entry short right there. Look at all those overlapping bars. 1, 2, 3, 4, 5, and one of them's a doji. I just think that's too risky. It would have worked, and you are looking for it to retest that low and make a new low, but I just don't think it's worth risking after having these two really not. I mean, these two entries right here can make you a day's trading. And I can tell you that with complete confidence because I was finished by 9 o'clock today and I got the majority of my money off of these two trades. And so you don't have to. Somebody asked me, actually sent me an email asking me that. Let me talk about that for just a second. I show all these trades, and do I take all these trades every day? No, the idea of this is not to show you my trades. The idea is to show you where the trades and the setups are, and so you can learn to study it and find them on your own. Now, do I take some of these trades? Yes, but no, I don't take every trade that I show on this chart. So if you read the video disclaimer at the beginning of the video, it tells you that. These are not necessarily all my trades. These are just the setups that I saw during the day or at the end of the day, going back and reviewing my chart. And so, no, I don't always take all these. Although if I'm trading during these times that a lot of them are here, a lot of them I would take. So um, it just depends. But no, I don't take them all. So the idea is to learn where they're at and to spot them, and then you really only need on average 2 or 3 of these trades a day. So there's really 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. There's 13 setups here that are basic setups, and the green ones may be a little more aggressive or a little more take a little bit more expertise. But out of those 13 that I just named off, if you can just get 2 or 3 of those a day, you can make a good living doing this. And that's all you need. And, you don't have to come in here. That's where a lot of people make the mistake. They think you got to come in here and trade all day and you got to make $5,000 or $10,000 a day or whatever. And there's probably some people that $5,000 or $10,000 a day is probably not nearly enough for them. But think about it. If you can come in here and make $1,000 a day, you can make over about $200,000 a year with just the 200, about average 200 trading days there are every year. That's making $1,000 a day. How many people do you know that can do that? Not many at all. To work for an hour or two each day and make 200,000 plus a year. And if you really want to get good at this and you got a big enough account, you can come in here and make $5,000 or $10,000 a day. But you still can do it in 2 or 3 trades. You don't need to take 10 trades a day. Um, wait on the best and take the best 2 or 3 setups you see out of the day. And you might have to wait for an hour or two to do that. But generally in the first couple of hours, there's always 2 or 3 or 4 or 5 trades that set up that are top-notch, easy trades that move quickly and you get your money and you're done. So anyway, enough about that. I didn't mean to get off on that tangent, but we were just talking about it and it came to mind, and it's an important conversation. But notice when we bounced off the low here, where are you expecting it to go? Back to the upper side. I wasn't 100% sure about this yet. The bounce right there led me to believe that it was, but we had to see what happens here. And it looks like it's going to turn down off that line, and there is a second entry short right there, but I wouldn't take it below that doji. I would have waited for this bar to set up, and if it would have ended bearish, I might have entered short there. But notice that's the first break, and you still don't have a new high. So, but what you do get a break, and you get 2 legs up to a new high, and then it sells off. And notice there's two legs in that move, and then there's a little move down, and there's two legs in this move. So this is a second entry short. And again, I didn't really like that bar, but when you got another one right beside it that's kind of bearish, just go short right there. I mean, it turns out when we turn down there, I mean, it turns out that, hey, that kind of confirmed that trend line, but this is the first break. And so that's a second entry short on this leg, and then on a bigger picture, that's two legs up. So that's a second entry short from there. So you can count that as a second entry short multiple ways. And you got the break of the little short-term trend channel right here, two legs up to a new high. That's the first time we've gotten back up. Prices had gotten back up above the EMA since up here, which it barely did up here. So that's a nice little move down, and so you're probably going to get a retest of that low. So, and there it comes, and then you get a move up. This is like a little breakout pullback short, and it did kind of, you've got several touches off that trend line, so it broke higher above that bullish bar, people trying to pick a low here, and it turns back down. It's a little questionable going into that low right there, but your real low was down here, and you figure it's going to test that. You get enough for a scalp, and then it kind of, then you get what I call a little breakout pullback short right there. And that's also, you can count that as like a little failed second entry long, and off it goes. And again, it's right off that trend line, that little shorter term trend line, the blue one. And it takes off. And again, you don't know it's going to run down like that, but you figure it's going, you figure you'll get a scalp out of it. And that's all we're looking for on all these trades is a scalp. And if it gets more, well, that's just gravy. And notice this is a bigger two-legged correction here. So I would measure this whole thing right here. Drag it over here to where my two-legged correction is. And that's going to be my target right there. And look, we got within one, it might even be a perfect measured move. Looks like it came within one tick. And just hang on to that and as long as it keeps running, you're looking for it to either hit here first or hit here. And since you don't have a break of this little channel, you probably figure it'll correct and then still come back down here and get close to that. And sometimes it'll even overshoot it. Sometimes it'll be a little short, but exit a few ticks in front of it. And but I would have, my suggestion is just to exit right before it touches right there. And here's something else. I can't remember if I mentioned, I've been meaning to mention this lately, but here's a clue. A lot of times when you got a good channel and it's real clear that it's holding prices properly, look at it climbing down that line right there. When it overshoots it on the channel side, that is often a good indication that you'll probably get a break of the trend line on the other side. So that was a clue right there. Hey, we may go higher here to the, and plus you're looking for prices to try to come up higher after they come off the low side. It will usually go back to the high side. Not always, but generally they will. And so then you get a turn down. But I think you've already had too much of a move. You're too close to your measured move, so didn't mark anything short there. And then, of course, it starts bouncing. So because now you had your break and you had a move down to a new low and it starts bouncing. You got a little channel working up, and then suddenly you get a break, attempt to go higher, and a little second entry short. And I like this one for a short simply because most of the time you'll get two legs down to a new low, and that's so small, choppy bars, that looks too much like one leg. You don't know that you'll get a whole nother leg, and you might get another measured leg like that. That's what you're really hoping, but it didn't turn out that way. You only went a little further, and it just found too much support here, and you get a little reversal pattern. It reverses, but I like that for a short. And then you get now you got a new channel working down. This one I really should have been green here. I forgot to go back and change it. But notice you got a nice little drop down, and it's two legs back, and it's a second entry short, but it's not a very good setup bar. You might could have waited for this one, but by that time, you're right here to the previous short or support, and it's the low of the day, so it's kind of dangerous to go short right there. And it did tick higher and then turn down again, and that's a failed second entry long. but you're going short at the very low of the day after having some great moves down. It's not worth risking, in my opinion. And this one was really iffy. But you can see there's two legs up, back to the EMA. You got your trend line off. I've kind of drawn it right there. You really could draw it right here and drag it up. And so when it started hitting right there, you figure that, hey, that's probably correct. And plus it's the EMA there. So you really got two kind of resistance areas there. But I still think it's a little risky because it's so close to the low of the day. And then now you get your break here. This little channel, this little short-term blue channel, move to a new low, and it bounces. But you need to wait on a second entry, and you get a second entry right there. But that's not a good enough one. There's too much overlap, too many uh, stems on each side and so forth. So just see if it'll test. But when it makes that double bottom there and a second entry long, notice that was a new high, pullback first entry, pullback. That's a second entry long, counting off the high. It's a second entry long on a little bigger picture, counting off the low. It's a nice bullish bar. It's a double bottom. You're looking for a reversal pattern. So a lot of reasons to go long. You're usually better off to wait on another second entry since you made an equal low there. But an aggressive trader is going to take that. And you see it turns out to be a nice trade. And then you get a second entry long here. It's also a breakout pullback long for this little kind of, this whole area across here is kind of a congestive looking or a little trading range. And this is your breakout and your pullback back. The EMA is holding. If you drew a trend line up across those highs and drag it down, it's real close to those lows right there. So, and that's a nice bullish bar coming off the EMA. So I liked it because and by now you're thinking, hey, we've reversed. And then you get another little two-legged pullback. So another second entry long right off the trend line right there. Notice that new high pullback, first entry, pullback, second entry. I think you were better off to wait on this bar to go long. And another easy scalp. And then you get your close outside, a move to a new high, and sells off. And then you get a second entry short right here. But that was really your first two swings. And even though that's really bearish, you could have entered there and it would have worked. Even if you waited on the red bar and entered, it pulled back, so it would have been a little scary, but it turns back down right there. So now you got a failed second entry long and a chance to go short, and that was a fairly nice move. It was a little concerning when it bounced right here because now I was looking like, hey, that's real strong support. But it never could break higher. It just works its way on down. And then you notice you had your break and you got to move to a new low. And it bounces. It's a little aggressive move again. And plus you've got those matching lows across there and it's a little failed break lower. So there's a couple of reasons to go long there. But again, I think it's a little aggressive. So I marked it in green. And you get your channel up. You get a break. Move to a new high. Plus you've tested this high. You've already had that high there once. You tested it. This is like the little double test rule. And it's a second entry short counting off that high. It's a nice bearish bar. It's a little lower high than that high. Good place to go short. And then where does it bounce again? It bounces right off of that same support area. But by the time you get a good bar to enter, it's this one. You might have gone long right here simply because it broke lower first and then turned and went out the upper side. But you don't have much room to scalp out right in there. And plus you haven't had a break of this channel. You did overshoot it. Notice how you overshot it here, and that was your clue that you might get an overshoot or a break of your channel on the other side. And you do, and then you get a couple legs down to a new low, and then it bounces again. Perfect price action rules. So notice that new high, double first test of that high, double test right here. First break of the channel, so you're looking for a new test of this low. It's an obvious strong resistance area that's turning prices down again. And notice the new low there. Pull back, first entry, pull back. It's a second entry short. Lots of reasons to think about going short right there. And then you kind of get hung up here in a little, it really looks like there's a midline in this little tight range here. And you can see that right there. Fits pretty good. Nice little midline there. And you just get hung up on this lower side. But notice, this is that trade I was talking about. I've talked about it a couple of times this week. Notice how you had all that support across there. And this is a proven range now on both sides. And suddenly you get that little fail, that big bearish bar. It breaks lower. And it goes one tick lower. And I bet you handfuls of weak traders go short right there, thinking that that's the smart way, because there's so many people that teach to trade breakouts and go with the breakout. But you're better off to go to fade those. And when I say fade those, take the opposite entry, because look how bearish it looks. If I move this over here, look how bearish that looks right there. And you're thinking, hey, if it goes below that, I'm going short. That's what weak traders are thinking. And then it ticks short and it turns up. Look how bullish looking that is. That's a little failed break below all that. And a lot of times really strong trends will generate from that. And look what happens. That takes you into a big move up. And look, this trend line that we drew earlier is holding. It held right here. It held again there. And we're trying to go higher again. But that was the last trade I marked. That's getting you really close. There's a second entry long right there. Notice that new high, pull back first entry, pull back second entry. So that's a second entry long. It's a failed second entry short. So there's some reasons to go long there. Plus if you draw the trend line off the first two swings, you're getting a bounce off a trend line there too. So I wouldn't have any problem just taking that along right there. The only thing I would say is questionable about it is it's close to that resistance. But see how it goes right on through this time. But that's what usually happens when you get a failure out the low side. It will push on out the upper side at least that far. And if you figure that, then you got enough for a scalp. But that was the last thing I marked. That gets you into the 2 o'clock hour. There's not any other trades until well after 2:30. So, but that's what I saw today. Looks like this trend line is probably valid here. We still got about 25 minutes left in the day. We'll see what happens. My guess is we'll probably end up in this area somewhere, but it could easily rally or sell off again. But it's been a really good trading week, and there's some good learning opportunities here today as well. So I'm about 32 minutes into this, a little longer than I like to finish these in about 20 minutes. But there was some good stuff today. But I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.